Rajat Sharma too joins in on the show. Rajat, hi, afternoon. Just wanted to understand what's the view on the market right now. Does it seem like the FII selling is going to abate? If not, the buying kicks in anytime soon?
Good afternoon, Aisha. I've been reading about this, and just yesterday I read somewhere the FII holding in Nifty companies is down to 16%, which is some 14, 15-year low. So, when you ask me that question, I wonder how much lower can it go? I mean, how much more can they sell? They've been constantly selling for the last few months, and this month itself, I think since the beginning of the month, they've been a seller each day. So, my view is this, that despite this brutal selling by FIIs, if the markets have not fallen as they would have a few years back with that kind of FII selling, then that means that our domestic institutions and retail is, not really selling, not closing their SIPs as of now, despite the 7-8% fall in the market. Any positive development on the FII side, whether it's some, tax relaxation from the side of the government, or once the euphoria in US with the change of government settles down and they decide to reallocate funds to emerging markets, any positive change could bring in a lot of money into the Indian markets. This morning I read in Economic Times that there's going to be 2.5 billion more foreign money coming into India because of the change in weightage by MSCI. That's like 21,000 crore, which is really nothing. That's how much these FIs have been selling on a 2-day basis. So, yeah, to answer your question, I think I'm pretty positive that markets will not fall a lot more from here, because this fall has been somewhat unwarranted. The results were not as good as I had hoped for them to be. But a lot of the fall is primarily on account of what you're saying, FII selling, and again, how much they can sell more from here is, I have my doubts if they can continue to sell. A lot of the money wants to come back to India, and is what I keep reading. I don't work with an FII desk, but I'm positive by the end of this year or early next year, a lot more money will flow back into India.
Yeah, there's definitely some disconnect, Rajat, because India is something which is providing that growth opportunity and people talk about it positively. But I think valuations were a concern that was keeping the money out. And now with this dollar strength, that also, gets a bit more complicated for flows coming in. But what's your view on Swiggy, and just news flashing at the bottom of the screen regarding some antitrust findings coming in for Zomato Swiggy, that they've breached the antitrust laws. But barring that, what's the view on some of these new age tech companies, and would you be a subscriber for the Swiggy IPO?
No, absolutely not. I think about an hour back, I was looking at the subscription figures. It's already 2.5 times oversubscribed. So actually, there's a good chance that people might get it if they subscribe for it now, because I think the retail portion is almost about as much as fully subscribed. So there's not a big oversubscription there. But I wouldn't subscribe to it. I actually did not even like Zomato. Zomato actually has gone up the way it has on account of its acquisition of Blinkit and other businesses that they've got into. Swiggy does not even have that kind of story. So how do they have a price earnings multiple of 21, which is what their offer document says, is surprising to me. I think I would actually avoid it, and I'm recommending most clients to avoid it, despite the fact that a lot of mutual funds have taken allocation to this. I fully sense that.
Okay, that's the SBI guidance for deposit growth set at about 10 to 11%. Rajat, any fresh buys from within banks?
No, Aisha, just what I bought slightly a little before Diwali, which was HDFC Bank and Axis Bank. My reason, I've already given, these banks are trading at extremely attractive valuations. 5-year basis, they've done nothing. HDFC Bank, for instance, used to trade at a multiple of 25, 26. And everybody wanted to buy it that time, some 4-5 years back. Today, it's trading at 17, 16, 18. Nobody's buying it. And I think the reason why the stock did not perform well is well documented. If you look at all the MPC meetings where the RBI governor said there's a skewed credit deposit ratio. So deposits are not coming into the banking system. And that's why I guess a lot of the government decisions with regard to doing away with tax advantage to debt mutual funds were taken away, and they've taken a whole host of other measures in small NBFCs. You've seen small lenders like Paytm suffering on account of this. The whole idea was to get more money into the big banking. And I think they will, going forward, benefit a lot from this. They're at the bottom of the cycle. So if you wanted to buy something for the next 3-4 years, these blue chips, which have not done anything for the last few years, particularly private banking, at the valuations at which they are, definitely you should buy. So in banking, HDFC and Axis is what I've added recently, just before Diwali. Federal Bank is an old holding which I continue to hold.
Okay, so that's the take coming in on some of the financials. Vinay, just coming back to you and asking your view regarding Tata Motors and Asian Paints. Both of these companies will come out with their earnings. Should one hold any position ahead of that, Vinay?
Yeah, so stock Tata Motor has fallen significantly from its old 52-week high. 1180 was the high, and right now the stock is hovering around its 800 level. So currently the trend of the stock is clearly down. There is no sign of trend reversal. So we should remain with the trend. So for traders, the advice would be to stay away from the long position. We don't know at what price it will make a bottom, though it is looking oversold on the short-term chart, but still the trend is into a continuation of a downtrend only. So better not avoid the long positions, because right now some outperformer sectors are doing well. Some stocks which are actually posting good results are going good. So this is the stock which is underperforming, and I would like to ignore the long positions and let it go and let it be into some consolidation. Then we will review our decision. But the Tata Motor is looking weak. What was the another stock? Can you come again?
This is the other one, Vinay, that I wanted your sense on.
Pardon me?
Asian Paints.
Yeah. Asian Paint. So Asian Paint, same kind of setup is there. From the high of 3,400, it has come down to 2,770. The same kind of setup is there like Tata Motor. It is into a oversold territory, but still the trend is down. It is trading below its important moving averages. So price setup is quite bearish. The previous swing low on the long-term chart, which was in May 2024, which it was around 2,700. So right now it is still 3% away from this. So I think that there is a support around 2,700. From there we can review, and if it bounce back from that level, then we can consider going long. But otherwise, the trend is looking bearish only.
Yeah, that's the take coming in on Asian Paints and what the reading is on the charts. Kunal, how much more selling do you foresee for Trent now?
Well, maybe I think closer to that 5,500 could be the first level of support for the stock. But then, when we go back into the previous last, I think 6 months to 9 months of plus uptrend for Trent, there was a point where the stock took a pause at 49.70 approximately on monthly closing basis. So that was almost some 7, 8, 9 months back for the stock. And I think that was the point where the stock started to get back into a high-paced uptrend. So generally what happens is when a stock gets back into a corrective mode, they tend to come back to the starting point of the previous leg where the rally started off for these stocks. So I think I would probably expect that maybe the worst case on the downside for the stock could be if it retests that 49.70 odd mark on closing basis. I think that could be the major corrective mode which could get completed for Trend, and I think that would also coincide closer to its 200-day moving average for the stock.
Point taken. Rajat, what's the view on capital goods? I mean, L&T came out with a decent set of numbers. You had a miss coming in a bit from ABB. Cummins numbers looked strong. Very, divergent kind of earnings coming in. Not a very broad-based theme that every industrial company is following. What's your take?
Yeah, so I'm not looking to buy anything in capital goods or infrastructure in general. So I've not been looking at these companies. I found that these companies have run up a lot. Most of these companies, when I looked at, were trading extremely expensive. So whether it's PSUs, infra, capital goods, renewables, these are some of the sectors that I've been avoiding purely on valuation. So there's nothing there that I have in my portfolio right now.
What about autos then? Have you added something there?
Yes, autos, you were talking about Tata Motors, and Tata Motors is a stock which, when I look at it, I just read there could be fall in JLR numbers, weak India business. But when I look at Tata Motors, I don't see any major reason, absolutely clueless about why the stock has corrected the way it has, around some 20% or so. Right now, if you look at it, it's available at, a price to earnings multiple of about 7. So any positive move on the revenue from here, and they have market leading advantage when it comes to EVs, although these days there's a lot of talk about hybrids doing better than EVs. Be that as it may, I think they have a market leading position. They've consolidated their position both in passenger vehicles and commercial vehicle space. So I'm actually clueless why this stock is falling. I have Tata Motors in my portfolio. The last time we added this was around 968 levels. So it's come down a fair bit from there, but I remain extremely positive. So within the auto pack, at one time I was really positive on Hero Moto and two-wheeler space. Right now, this is one stock that I'm really positive on. So I'm not worried about the fall. In fact, if it falls a little more, I'd probably be looking to buy more of this next month when we have to do more incremental buying.
Okay, that's the take coming in on how is it the one is looking at from within the auto pack right now. But Page Industries, that shot up quite nicely. It's settling in with a over 7% gain. That's where the stock currently is in trade, so holding out very well. There's, of course, Indian Hotels, which has also moved up very, very nicely. For Page, of course, the profits shot up about almost 30% and the EBITDA margins as well saw an uptick of about 204 basis points. An upgrade coming in from Motilal Oswal. They've revised the price target now to 54,000. They're saying that there is improved growth print. The volumes have seen an uptick of 6.7% and it's an all-round beat. The growth acceleration, according to them, is going to sustain. Rajat, Page has had quite a long patch of underperformance. Are you re-looking at this one?
No, this is not a stock that I'm, re-looking. In fact, I never had this, but Indian Hotels actually is a stock which I think I feel I sold a little early, and since it's a Friday, I'll just give you my view. This stock has gone up 10x in the last 4 years. So from about 77 rupees to 730 rupees in 4 years. I do understand the whole unlock trade, but there's nothing that justifies. And why I'm excited about this is because I'm a big investor in ITC, and ITC Hotels is going to list separately in the next 25-30 days, or definitely by the end of this year. So I was thinking that they would command a very good multiple, given that the other two hotel companies, Oberoi and Indian Hotels, have been EIH and Indian Hotels have been trading high. But I get reminded of what my professor once told me: when you see a turtle on a rooftop, it didn't reach there on its own. Turtles don't reach rooftops on their own. Somebody has done something with the stock, because 81 times earnings, that's irrespective of how much the earnings improve, there's nothing that justifies a 10x move in 4 years, 5 years, 4 years in fact. So extremely overvalued. I'm not an investor in Indian Hotels, but this may be a good development for somebody who may want to buy ITC more at this point.
Okay, fair point. That's the take coming in on Indian Hotels, however. Just taking stock of some of the other buzzers in trade, and Info Edge as well came out with its numbers. Even though there was an extraordinary income of about 164 odd crore rupees, the revenues have seen an uptick of about 3.6%. Net profit, though, has seen a downtick on a sequential basis, and the EBIT margin has seen an expansion of about 141 basis points on a sequential basis. What within IT is the preference for you right now, Rajat?
Yeah, so Aisha, beyond the stocks that I've talked about, which is Infosys and Emphasis, which we added last month, there's one company which we are adding in a few client portfolios based on risk profiling. And I'll give a disclaimer: I myself added this in my portfolio. It's a company which recently IPO'd. It's Unicommerce. And this is a company which should grow along with growth in India's online business. It's slightly expensive in terms of valuations right now. The stock is IPO'd at a much higher price than its price band. From from warehousing to everything that happens at the back end after you place an online order, warehousing, billing, delivery, everything is what they manage. And basically, anyone who's in e-commerce today, any big player, uses Unicommerce. So their clientele is across the board. Any big brand is with Unicommerce. And, with this kind of market share, market capitalization of 2,100 crore, I think in the next 5 years, this is a company which should do 5x in 5 years. So this is one stock which we've added in some client portfolios. We're keeping an eye on this. We'll probably be adding more of this in other portfolios going forward. So yeah, this is a company which we've added in IT beyond beyond, Infosys and Emphasis.
Okay, so Unicommerce is one stock that you have added, but taking the BTST trades now, Kunal, what's the BTST or STBT trade?
Yeah, I'll go with BTST and few large cap names which I would want to highlight at current levels. So the first one is a buy on Infosys, and I think that's a chart which is looking attractive. My sense is that the stock could probably be at the cusp of a breakout, just closer to that 1380 plus mark. So would look out for targets in the range of at least couple of percentage points from current levels. So 1880 as a target, stop us to be kept at 1800 levels, and Laurus Labs is the other stock which is on the verge of a breakout, just closer to that 500 levels. 498, 499 is where the stock is trading right now. So 520 as a target, stop us at 488.
Okay, so that's the take coming in on a couple of these stocks that Kunal likes at this point of time. Well, what else is happening in the market? It was a fairly turbulent week with a lot of news flow that we had to deal with, right from what's happening in the US with respect to elections, what happened as a result of the market mood of that, and then of course the Federal Reserve commentary coming in from the United States. All of that had a major bearing on the markets this week. Let's take the week-to-date chart and see how the overall week has fared, because while we started off pretty okay, there were a couple of days of down days as well, and by the end of it, it looks like it's going to be another week which is in the red for the markets at this point of time. But Kunal, what's the view, let's say, for the coming week, because heavy news flow is out of the system. India VIX has cooled off a bit. From here on, is there more probability that we'll be looking at 24,500 by the end of next week?
Yeah, that could happen. So in a bear trend as such, the rallies will be very sharp, like what we saw in the last couple of days or 2-3 days back, when there was almost like a 500 to 700 point move for the index in a very short span of time. But then as I mentioned earlier, that the market lacks follow through, and after 2 or 3 days of very sharp rally, the market eventually gets back into an inertia correction mode. So I think that's the concern for the index. So 24,500 could be possible, if we have that one phase of a short covering rally yet again. But then eventually, I think what matters is the how strongly the index holds to that 23,800 mark support level. We've already tested this level twice in this week. We've managed to bounce back, protect that support point. But if we go into a third retest towards the previous major swing lows, that I believe could probably indicate that maybe we could be in for some more correction.
Okay, we could be in for a bit more correction, but what's the latest news flow at the bottom of the screen? There is that holiday which has now been officially declared on 20th November, which is of course the polling day for Maharashtra. Earlier, BMC had asked most of the organizations to declare a holiday, but now the official word is out from NSE that there will be a trading holiday on 20th November on account of the assembly elections in the state of Maharashtra. So next week is going to be truncated, and the week after that too is going to be truncated, and then of course the month of December, which usually is a bit of a lean period. But does that mean the market is going to be sideways for the next couple of months, Rajat? Because FII activity usually dwindles in the last couple of months, and now earnings season has been weak, no major trigger per se for the Indian markets.
Yeah, to be honest, FII activity is anyways dwindling. So, I wouldn't place much hope on FIIs reviving the Indian markets in the month of December for sure. Anyways, it's not, that's the month that they go away for a holiday. But, markets remaining sideways, and my sense is that, even if they remains within 1,000 point up or down from where they are, so like, let's say they fall by 1,000 points or move up by 1,000 points, and in the next 2-3 months they remain there. What will definitely happen, I feel, there's nothing definite in the market, but what I feel will happen is a lot of sectoral rotation will happen. A lot of money will flow into the stocks and sectors that I was talking about, which is why I'm investing there. Private banking, large private banking stocks like HDFC and Axis, the ones I spoke about. Technology, after what's happened in the US, the stocks that I spoke about, Infosys, Emphasis, I spoke about Unicommerce, a small IT stock that we've added. Some of the pharma companies, I like. It may not rebalance, money may not move there, but a Laurus Lab, until it trades below 500, is a stock definitely to keep an eye out for. ITC is a stock which is fallen from 530 to where it is, because nobody knows at what valuation ITC hotels gets listed. So these are the sectors and stocks where I think money will flow into, and there would be some rebalancing act, despite the fact that market remains sideways, 1,000 points here or there. I too feel that that's what's going to happen. I'm not a technical person, but I was listening to Kunal, and it was spot on when he said, every time market moves higher, it loses inertia and falls back. And I think, I don't know, I have no reason to feel that way as a fundamental person looking at the market, but my sense is that's what's likely to keep happening in this holiday season, but there would be rebalance.
Right. Okay, Rajat, great to have you on the show. Well, the next week, of course, is going to be critical. While it may be truncated with the markets shut on Guru Nanak Jayanti on November 15th, which is a Friday, but there will be all that IPO action, which is going to keep the D Street warm. There'll be the Nifty weekly expiry and macro data points. Both the CPI as well as the IIP data is due for November 12th. And of course, the AMFI data for the month of October as well, which we're going to kickstart next week with in terms of a data point.
If you like this video, then like, share and subscribe to ET Now.